Hello guys, this is Damien from OrderFlow chart. In this video, I want to talk about understanding order flow patterns for MT5 platform. Okay, so for that I prepare two different slides, and the first order flow pattern that we have to identify in any print chart is the aggressive market participant. Okay, so understanding aggressive buyers and sellers in relation to passive buyers and sellers. Okay, that is the main goal. When you have aggressive sellers, they are selling into passive buyers. Okay, and in passive buyers, it is a limit buy order. It's just that. Okay, and when you have aggressive buyers, they buy from passive sellers, which is limit sell orders. So it is important to watch if the market can go through the levels of big passive bids or offers, okay, usually creating a stack of consecutive price levels, which can be used as important areas of support and resistance. Okay, now we go to the charts now, and we are going to identify aggressive participants and also the stack of consecutive price levels. Okay, so here we are with the OrderFlow chart software. The software itself, it identifies automatically the aggressive participants. Okay, it is a color number on the chart. Okay. Represented by, in this case, a white color, which is represents on the right side of the bar, which represents the aggressive buyer. Okay, and a yellow color on the left side of the bar, which is represented aggressive selling. Okay, so the software it's doing for us in real time and automatically. In this case, we are seeing Euro future 2 minutes chart. Okay, and also we can know that at some points, okay, we have consecutive price levels of aggressiveness, and that is to be considered as a stack. Okay, a stack of aggressiveness, and those are usually very important areas eventual of support and resistance. Okay, we can take a look, for example, this one. Okay, we have 3 consecutive levels of aggressive selling. Okay, and this could be used as support or resistance. In this case, as we have 1, 2, 3, 4, these 4 here, it represent the other pattern that I'm going to explain just in a few minutes. But for our purpose here, we can tell that, for example, this level, okay, this level is going to be very important. Okay, we can mark that and project it into the future, how the price reacts to that. Okay, in this case, it went up. Once it's broken down, this level is not longer supported by, in this case, buyers, but sellers. Okay, it went down, and we have here 1, 2, 3 consecutive levels of aggressive selling as well. So we can mark those levels, okay, and project it in time. In this case, we can say that those three consecutive aggressive selling price levels, stack level, it is acting as a support. Okay, and this level, once the price was rejected here, it went up and rejected again here because it found now an area of resistance. When it was broken, that resistance area will convert or transform to a support area. Now, let's back to our slide. And the second pattern of any order flow breathing chart is a sequential decline and responsive activity, which is actually it's my favorite and one of the most important patterns found in any order flow analysis. So what is very important is that you can find the sign of price rejection lock within each candle, okay, using this kind of order flow chart. It takes the form of sequential decline and responsive activity in both instances. Okay, you can see volumes real-time response to price levels and forward, giving you a chance to prepare for your entry. Okay, sequential decline is the lack of interest to continue moving price up or down. That is why it is rejected. Okay, it takes the form of sequentially decline bias of sellers starting at the tip. It is your sign that price is flagging with fewer interested parties. When the other side steps in, also at the tip of the price extreme, you find responsive activity. Okay, and this is a key pattern for order flow analysis. Okay, so let's back to the chart. I'm going to show you a sequential decline and responsive activity one more time generated automatically in real time for the software. Okay, those numbers that you can see below or above in several bars is telling us that there is a sequential decline. Okay, in this case, this 4 here is telling us that there is a sequential decline of sellers. Okay, sequential decline of sellers. So it means that these aggressive sellers here is sequentially declining while the price going down. And what is even more important is that, remember, sequential decline and activity response. In this case, we have sequential decline of sellers, but at the same time, this is 4, it means 4 price levels. 1, 2, 3, 4, as the price moved down. Okay? At the same time, at this price level, we have 101, which is the activity response from aggressive buyers. So this bar is telling us that as the price goes down, okay, we are reading on this chart, on that bar, the order flow is telling us that there is starting to be lack of interest from the sellers to sell more, and the buyers just saw that lack of interest and start taking control. And that is why the price is going up. Okay, and this is the way, in my opinion, is one of the best way of reading any order flow chart.